Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, Portfolio Check-In. We talk to a wealth advisor about the element of portfolio diversification that you may have been missing for years. And retail investor trends, we'll talk about Gen Z and millennials' growing push towards gold and crypto as hedges to market volatility. Plus, we sit down with a three-time Nascar champion to discuss building wealth and giving back. All that and much more coming up during today's show. We got a lot to get to. So first, let's start off as we always do, taking a look at the market, seeing a little bit of slippage for the S&P 500 and the NASDAQ right now. We started off the day in positive territory, but now we are in negative territory, mixed ultimately, but the S&P 500 and the NASDAQ down, the Dow higher, flat, barely to the upside here to end the week. Joining me now, we've got Jim Carroll, Ballast Rock Private Wealth, Senior Wealth Advisor and Portfolio Manager. You say that international exposure is an element of diversification that has been missing for years. Walk us through how you're finding opportunity in that mindset.
Brad, it's good to be with you this morning. U.S. investors have seen great returns from domestic markets, and so it's been difficult to steer them away from that, even as what we've seen, particularly this year, is outscoring from international equities, and that includes Europe, Asia, Latin America, places that investors have really learned to ignore over the past 10 years. And so we're encouraging people to be a little bit more broad thinking in terms of how to diversify their portfolio.
And so, Jim, with this in mind, coming into the year, we'd heard all about the U.S. exceptionalism trade, and then that faded as we got some of the threats and the impact in the market, in the equity market, due to tariffs. And now we're trying to figure out, okay, where is there still the prevailing mindset that exists within Wall Street? What is the mindset that's prevailing for you, especially within the international markets that seem most appetizing at this juncture?
It really is broad-based. We've seen outperformance in Europe. I have friends in Europe who tell me I'm crazy to think that investing in Europe is a good idea. And yet we've seen outperformance. We've seen outperformance in Latin America. Think commodities and think the relationship of some of the countries in Latin America to the countries in Asia. We've seen outperformance in Japan, especially in currency hedged approaches. So it's a broad-based outperformance that we've seen bubbling up. Will it persist? We're going to find out, but we think it's a good time to begin to reincorporate some international diversification into portfolios.
And so as you're thinking through the sectors that are also set to benefit as a result of that, which ones kind of rise to the top of the crop?
Well, the one that's been jumping off the page, and gold is one that everybody's heard of by now, or at least hopefully they've heard of by now, because gold, the performance of gold has been outstanding over the past couple of years. But the miners and some of the other metals companies have been laggards relative to the metal itself. But just in June alone, the ETF XME, which is metals and mining, is up more than 10%. So that's something that's hard to ignore. It's a newer trend, but it's one to keep an eye on.
And so as we're thinking through as well, the international exposure that's buying into long duration bonds here as well, what should we make of how we're seeing some of the international money flow towards bonds here in the U.S. and the amount of holdings that I believe are still sitting at some of the record levels based on what I was reading through in a report from Apollo chief economist Torsten Slok not too long ago?
Well, bonds, have been a mixed bag over the past couple of years, obviously, as the Fed has begun a rate hiking cycle, and it's unclear yet what the pace of any pullback from that hiking will be. And there's a great debate going on right now about where you want exposure to the bond market. We think that in terms of the Treasury market, shorter duration is probably still a better place to be because there's risk at the long end. And we also have been fans of private credit for quite a while now as an alternative to things like treasury bonds.
I wonder how you're evaluating companies that have the most outsized exposure, especially to China right now, amid us still being in kind of pause phases and the worst of the tariff rates being lowered, but still there are larger negotiations that still need to take place. There are some companies that are in the crosshairs, especially as they're wading through a Chinese consumer that is becoming much more kind of nationalistically minded and making sure that ultimately for these companies that have exposure in the region, that investors can best evaluate what type of hit they should be they should be expecting in the near term. How are you kind of wading through that assessment?
Honestly, we're trying to stay away from picking specific stocks, especially as it relates to equities that may have strong China exposure. We think that it's more appropriate for most investors to remain invested at a sector level or at a broad market level. Most of our exposure to U.S. equities is broader based. We think that trying to pick stocks in an environment like this is very perilous.
Jim, great to have your insights and analysis here with us. We appreciate it.
Thank you, Brad.
A new survey on retail investors shows a majority have adjusted or plan to adjust their portfolios to invest in more gold and crypto amid concerns over a weakening dollar. Here with more, we've got Bret Kenwell, who is the eToro U.S. investment analyst. Bret, good to have you. So just tell us more about how retail investors are thinking of gold and crypto, commonly known in Bitcoin's case historically as digital gold, as a kind of hedge to some of the uncertainty that we've seen.
Yeah, Brad, thanks for having me. I think, when you look at retail investors, sort of one characteristic that really jumps out to me about the group is they tend to be opportunistic. In this case, we were kind of surveying them specifically about certain risks, one of them being a weaker dollar. And their response to that was to allocate more of their portfolios to gold and crypto, specifically in that order. But I think, when we kind of zoom out, be it for Q2 or really for the year, they've seen how well some of these different asset classes have performed. And I think that has really been a motivating factor for retail to sort of, step back and zoom out and reassess how they want to have their portfolios positioned. Yes, it's still a majority into U.S. stocks, and that is a favorite asset class for them to hang out. And I believe that will be the case for the foreseeable future. But things like gold, Bitcoin, even international equities have certainly gained traction with retail.
I thought the findings from the survey were really remarkable in the differences in how different demographics, age demographics, are looking across this. What was the breakdown there that really netted out?
Yeah, I don't think it'd be too surprising to your viewers to hear that the younger side of retail investors, so your Gen Zs, your millennials, even Gen X has a more favorable stance towards crypto and Bitcoin than our boomers and silent generation, some of our older, more classical investors. But I think at least what stuck out to me was that the younger generation was also more favorable towards gold than the older generation. So I think, again, that is sort of a tell on how social media, how the news, how media kind of influences younger investors and how they're digesting their information and where they're getting it from. Because, gold has done so well, not just this year, as a safe haven, investment, a safe haven asset when volatility was very high and stocks were doing poorly. But gold has actually outperformed the S&P 500 in 3 of the last 5 years and is on track to do it again this year, provided, the second half isn't too wild. So I think they see that and they view that as an opportunity.
We heard a lot about the retail participation and saw this play out in some of the data that was presented. Retail investor participation in the rally back up to and from the depths of the tariff uncertainty to the levels that we are at now with the S&P 500, I think still in range of, and I'm trying to pull it up here on my screen as we're looking it up. All right, still in range of 6,000. We were at 6,000 as we began the day. We have seen a little bit of slippage, but all of this considered, I wonder if there is a concern that you're seeing retail investors express right now and what that might be.
I don't know that I've necessarily seen a concern. I think there is a worry broadly speaking, with investors right now, just kind of as we're, we're right on the sort of the doorstep here of going into the second half of the year. And, for all intents and purposes, the S&P is about flat on there. It's slightly higher, but, from its peak to its down to its trough, we had about a 20% correction, and in a snap of your fingers, just like that, was up 20%, and we're, just kind of like you mentioned, hovering around that 6,000 mark, and we're kind of coming to the second half of the year with still some big question marks about how certain things are going to resolve, be it Middle East tension, be it the trade war situation, and that can go both ways and create pockets of volatility. It can also create opportunities, sort of depending on how some of these longer term situations work themselves out. But, I think right now retail's just sort of waiting for maybe a dip to refresh themselves a bit. They stepped in heavily in early April. And retail doesn't have a crystal ball. Sometimes they're a little early, sometimes they're a little late. But in this case, they stepped in at pretty much the perfect time. That April 7th low, we saw a lot of retail activity, a lot of buying interest, and they've really enjoyed this run up. Now I think they're waiting for that next catalyst to get them excited.
We know that President Trump resorts to this schoolyard type of commentary around Fed Chair Jerome Powell. But for investors who are best anticipating what the Fed may do throughout the rest of the year, how are retail investors kind of making sure that they're reading through all of the commentary and listening to the tenor of the Fed, but still perhaps fading or deprioritizing how they're actually ranking the importance of those Fed moves over the course of this year in order to still have their portfolio thesis play out correctly?
Yeah, that's a really good question. I think when it comes to especially digging through what the Fed's planning to do or what the Fed, what they think the Fed will do, again, I think social plays such an important role with how investors are not only getting, but digesting and conversing about the current landscape for investing. And right now, I think the Fed's in wait and see, and retail's in a wait and see mode, waiting to see when are they going to cut rates. I think there's this sort of, maybe impatience isn't exactly the right word, but this sort of wonder, like, when are they going to cut? And right now the consensus is 2 cuts by the end of the year. Whether that changes as we kind of push through the summer and how inflation sort of works through the system, that'll remain to be seen. But right now I think they're just kind of waiting to see what they're going to do and focusing maybe on some of the other headline catching events, whether that's trade or maybe it'll be earnings in a couple of weeks that kind of recapture that focus from retail.
Bret, good to see you. Thanks so much for taking the time this morning.
Yeah, thanks for having me.
Coming up, everyone, 3-time NASCAR champion Joey Logano joins me in studio to discuss his career journey and his mission to give back. That's next. Joey Logano was a 3-time NASCAR Cup champion, the youngest ever winner in 2 of NASCAR's top 3 divisions, and the second youngest Daytona 500 winner. He currently drives number 22 for Team Penske. But when he's not on the racetrack, he works on the Joey Logano Foundation, which has donated over $6 million since it began in 2013, with a mission of helping young adults and children in need. Joey joins me in studio now. Joey, great to have you here.
Thanks.
On Yahoo Finance. I mean, you won your first nationwide series at 18 years old. How do you approach building wealth over a long tenured career now in NASCAR?
I always feel like, in life, you just have to figure out how to be good at one thing. Like, how can you be elite and set yourself apart from the field or competitors, whatever that may be, right? For me, it was NASCAR racing, right? And that was my thing. I found a passion. I loved it. And then it's like, how do I become the absolute best at that? Separate myself from the field. And that's kind of how it's worked for me. And obviously from that point on, a lot of opportunities come their way, right? As a professional athlete, I always say I have a very unfair advantage when it comes to relationships because of our partners that are on our race cars and things like that. You can call the CEO of a company right up and they want to say hello to you, right? Yeah. And hang out and those type of things. So you have a great opportunity ahead of you. So you want to keep focused on what your main job is, which is driving the race car, but also take advantage of the other opportunities that are sitting in front of you.
You mentioned something really key in that you have a direct line of communication. Should you be able to construct some of those ins with company CEOs, or making sure that if you wanted to start something that you're able to kind of seek capital at a quicker pace as well, how do you kind of make sure that you and your team are evaluating the right opportunities where you want to make sure that the Joey Logano name is well represented, that you're building on something that you're still passionate about as well?
Being authentic, to your point. Authenticity is the most important piece of it, because people can read through the BS pretty quick, right? They can see like this not really what you're into, right? But they know I'm a car guy, right? So car stuff just matches perfectly, right? As a race car driver, most of our partners that are on our race car today are car brands, right? Whether it's Shell and Pennzoil with oil, if it's the Ford Motor Company, Discount Tire, right? The majority of them, AAA, all of them seem to have some kind of relation to automobiles. And so that's a natural fit. And so when we find opportunities that are somewhat outside of the sport, it's usually all kind of ties back together to motorsports one way or another.
You know, when you think about the deals that you've been able to make over the course of your career, where and how do you assess and look back at some of the deals that maybe you had to walk away from? What are some of those values that you, when you're discussing with CEOs of companies, say, hey, this is what I need represented if this is going to be done right, and if there's going to be any type of dollar figure that we're discussing or exchanging?
Well, how long you want to be around, right? That's the first question you want to ask. And where your morals lay as well, right? Is it something that you really truly believe in and want to promote to help not only the brand that you're promoting, but the people, the consumer, right? That's purchasing that product. You want to make sure that you are on the same page with that. And also, like I said, authentic to something I'm actually going to use, right? Like it's hard to promote something that you don't use in the day-to-day aspect of things.
For younger drivers out there, what's your advice for them building kind of the early pillars and foundation for their own wealth that they might be trying to make sure that they're accruing over time, knowing that there's some significant input costs that go into this sport as well?
Yeah, well, I mean, it's tough for athletes because you're jumping into something head first, right? When you grow in business, it's kind of a slow growth typically. But for an athlete, you're like, boom, you hit it. Yeah. And you're like, whoa, you're making big bucks all of a sudden. You're trying to figure out, how do I invest it the correct way? How do I find people around me that I trust? Because that's scary, right? Trying to find the right people. And I think the biggest thing is you got to learn yourself. You got to take the time there's plenty of ways to learn now, right? Like you can learn about finance without going to college.
You can watch Yahoo Finance.
Yeah, you have a channel right here, right? Like you can do that. There's plenty of ways to educate yourself these days. I think that is one of the most important things to do that, and not just be somebody that just drives the car or just does whatever that one job is. Try to expand your horizons a little bit and see the other opportunities there. But understand that as an athlete, it's here today, it's gone tomorrow, right? There is a very short shelf life. So you have to maximize while you're on top, right? Because not only is that big paycheck going to go away someday from not doing what you do, but also you're not as relevant someday. Right? You go 10 years down the road, is anyone going to care who won the 2024 NASCAR Cup Series champion? Like, I don't know if it's going to matter that much anymore. So you got to capitalize right now while the iron's hot.
Just lastly, while we have you here, you also have a significant philanthropic effort that is core for a lot of athletes to really think about once they come into wealth. What am I doing with some of this money to also help either community I came up in or some of the initiatives and missions that I know I would like to see furthered and advanced? Yeah. What really inspired your heart to be able to take some of that earnings and then also put it to work helping other people as well?
I think you have to ask yourself, and no matter what you're doing in life, is why am I doing it, right? Am I making the world a better place? And when I take a step back and I look at what I do for a living, I'm driving a car in circles for 500 miles to end up in the same place. Am I making the world a better place? Maybe some people enjoy watching racing. I bring some smiles, faces, those type of things. But am I really? I don't feel like I'm doing enough, right? And so God's given me this incredible platform to inspire people to live a life of generosity. If we can talk about it, and attitudes are contagious, we say it all the time, right? If you can talk about this stuff, maybe it's enough to trigger someone. For us, foster care is our main mission. We absolutely love the foster community, the kids, not only the kids, but the families that are willing to put so much into a child they haven't met before that's been really put through the ringer. And 9 times out of 10, it wasn't their decision, right? So we have a huge heart for them. We will do a lot of great things together, and it's a long-term investment, right? Like with children, that's what it is, right? You're not going to see an immediate, difference. It takes years and years and years of great people, great hearts, to be able to really make a difference in a kid's life. And that, to me, that's the why. That's what it's all about.
Well, we appreciate your initiative and, of course, the work the foundation is doing. We also appreciate you taking some time here, racing over to the set. And then you've got some other stops while you're racing around New York here, too.
We're having some fun.
We appreciate you stopping by Yahoo Finance, Joey.
Absolutely. Thank you. I had a blast.
Absolutely. Everyone, we've got all your markets action straight ahead. Stay tuned. You're watching Yahoo Finance.